The S&P 500 is almost back to the high of year. We're only a couple points away from the high that was made on the 27th of July up here, a little over 4,600. So a pretty insane rally to say the least. And we're only about 100 points lower than my February price target of 4,700 that I've had since the lows from back over here. So this rally should extend just a little bit further. I would not be surprised to see some consolidation up here first though, since this is a known supply zone that we rejected hard last time. Potential cup and handle pattern could play out from here with a minor pullback followed by the eventual breakout in that Santa rally period seasonality, which is the back half of December. But regardless, a very strong rally to say the least. And it's not only for the S&P 500 or QQQ, it's all across the market, all the indexes. Even IWM had an amazing breakout on Friday. As you can see here, it was able to hold the upwards trend line after a retest within that first hourly candle, followed by a ton of upside afterwards. So all the markets ripping, even the Dow Jones, you can see here just on an absolute tear to the upside, just consistent upside after breaking out of the downtrend back here in the beginning of November, so about a month ago, followed by a lot of upside afterwards. And honestly, just looking at it from the daily chart, this looks like one of the strongest of the indexes, or at least has the best possibility of getting back to all-time highs actually up here around 37,000, just because of how strong it looks, especially on the weekly chart. Had a super strong weekly close and just continuation of the upside. So these are great signs for the market to have continuation into Q1 of 2024, which also means I'm interested in finding some individual tickers that maybe haven't caught up to the rest of the market yet and could potentially catch up here in the back half of December and Q1 of 2024. One of those tickers that I'm interested in has actually been trading fairly slow lately is Tesla. You can see here a lot of consolidation despite the large rally we've had as of recently, even though it had a nice breakout over here after forming the inverse head and shoulder. If you remember a couple videos ago, I mentioned this inverse head and shoulder pattern with the left shoulder, the head, and the right shoulder followed by a breakout. We did have this breakout, and then we consolidated for about 2 weeks over here, which is very rare for Tesla to consolidate for this long and typically means it's priming for a large move in the future. So that's definitely something that I'm going to be interested in. And also, we got news of the Cybertruck on Friday morning. You can see we actually had quite a bit of a gap down just because a lot of the features of the Cybertruck weren't exactly what Tesla had claimed a couple years ago. So there was some weakness that we had, although it was able to retest this downward trend line all the way from the highs actually. As you can see here, this goes all the way back to these highs that were made, at least structural highs of 2023 back in July. So this downtrend line was retested successfully, was able to bounce up. So now we want to see continuation going forward. And speaking of the Cybertruck, the Cheddarfield Twitter account did post a very funny video that's actually CGI, so it looks very realistic, which is the funny part about it. But as you can see here, the robots are testing the durability of the Cybertruck. And ideally here, Tesla is going to show us some durability as well. If it's able to hold this downward trend line, as long as it can hold above here, then we can see a nice breakout continuation upwards, since the next key resistance is this 253 level. Above 253, we can see a retest of this uptrend line. It's actually a very established uptrend all the way back from the low that was made in January of earlier this year. You can see we were able to hold this trend line for a while until we broke down below over here. And now it's likely, at least if we can get above 253 again, that it will retest, which should be about, depending on the time that it's hit, just because of the extended angle here of the trend line, but should be about 270, roughly around that range by the time it is hit. But again, everything starts with this downward trend line. As long as we can hold above this, we can go up to 253, and above that, it can go to 270. So each of these levels is crucial, and any bullish bias for that matter, we do need to stay above this roughly 227 level on the way that I derived that. If you go to the 15-minute chart here, it's just because of this large dip that we had amid this consolidation range. You can see it was a large dump, the first 15-minute candle here of November 17th, which was followed by a large rally afterwards. So whenever you see large dumps like this that are followed by a super strong 50-minute close afterwards, that shows there's a lot of support at whatever level that it was made. In this case, that level happens to be 227.36. So we definitely want to see Tesla stay above this in order to warrant a more upside continuation. But for the shorter term, we do want to see it stay above roughly 233 now with this downward trend line. So these are just a couple levels to keep in mind. Again, the rest of the market is in a major breakout right now. So a lot of that strength can trickle down to Tesla and allow it to break out even higher. So I definitely am going to be watching Tesla for this week for potential upside. And like I shared earlier in this video, IWM is another ticker of interest just because we saw over here a major breakout on Friday. And not only was this a large daily breakout, but also it is completing an inverse head and shoulder pattern. I referenced this pattern actually in a couple videos ago as well. And the key was getting back above this trend line right here, which you can see starts from this major low that was made in September of last year. We basically were holding this line similar to Tesla. We were holding this upwards trend line for a while until it broke down. And in this case, after we retested and rejected off this trend line, it formed an inverse head and shoulders, which was followed by a large breakout to the upside. So right now it looks like there is room back to around 188, 190. That's the next key supply zone. You can see based on the wicks over here, there are large wicks on the daily, roughly around 188, as well as all the way up to around 190, mid 190 here, which is a characteristic of a supply zone and a strong one at that. But at the moment, there still is room to run, especially whenever you have such a strong daily close. This typically is a precursor to more upside, and also it's backed by a strong weekly close. So a lot of technical bullishness here on IWM, which means it's prime for a trade setup, PA permitting, and PA permitting just is price action permitting. If we do see it pull back a little bit early this week, it is a potential buy setup, especially if it were to pull back to around 182, 183. You could see it continuing up from there, just be a clean retest of the previous rejection spot. You could see we rejected roughly 182-ish, both on November 15th, as well as more recently on November 29th. So really anything in this 182-ish to even around 183, just because of this wick we saw here on the 30-minute candle, is an area of interest for a long with an hourly close below that range as being the risk. And for the intermediate term, in terms of its uptrend, we do want to see this trend line continue to hold, but just based, again, like I said, on the daily chart structure as well as weekly chart, it's likely this won't be tested anytime soon just because of the strength at the moment. But again, similar to Tesla, this is one to watch for potential trade setup this week. Personally, I like Tesla a bit better just because this is more so overextended. Because again, remember, Tesla is right around that range or ad range in this case because we were just a tad above this downward trend line. So there's less risk in that regard. But when you are trading something with momentum like IWM, the trend can certainly be helpful to your position. So that's something to note, as well as the flow that we saw on Friday. Pretty insane on IWM. 3 million out the money call, 3 million in premium for an out the money call above the ask, and a very short expiration, only about a month, less than a month at that. So this is a super unusual order. They did sell the same one afterwards. So this isn't as mind-boggling as if it was just by itself, but still this shows that there's a lot of activity on this ticker, and not only this print, but also all the other ones we saw throughout the day. 2.7 million in premium for the 190 call as well, but this one's for the 119.24 expiration, and a variety of puts being sold in aggressive fashion, as you can see with all these sweep orders. These are bullish puts being sold to open just because the volume is over the open interest, and we don't see any indication of these being bought earlier in the session, despite the volume being very high for the day. So these are bullish, as well as an additional put sell up here. There seemed to be quite a bit of activity in this ticker for the day just because of the volume. You can see 146,000 contracts throughout that day with only 14,000 open interest. So we'll see how much the open interest value is tomorrow when the market opens, but a lot of bullish emphasis on IWM in terms of options flow, as well as the close that we saw on Friday. So this is definitely one with momentum, and the trend is your friend in this case. Regardless, as always, appreciate you guys watching this video, and I'll see you next time.